Hey there, this is Adam with Peak Business Valuation. Today, we're going to be going over an introduction into business valuation, why it's important, and how it's done. Business valuation is ultimately, at its core, the determination of a company's value. That is to say, what a company is worth to a potential investor, or what it is worth to a potential buyer of the company. Valuation happens for a number of different reasons, but ultimately boils down into two key categories. Number one, taxation valuations, and number two, non-tax valuations. Taxation valuations, just as it sounds, is ultimately when a company is being taxed or when an owner of a company is paying a tax based on the value of a company for a variety of different reasons. Non-tax valuations, however, is a much more broad area and where a lot of valuations happen. This is where a company would be valued should a owner want to buy it, or rather, a owner want to sell it, or a buyer want to buy a company. These are the main reasons, or the most common reasons for a business valuation for non-tax purposes. The how behind business valuations comes down to business valuations are kind of like a big puzzle. Business valuators have a lot of different approaches, tools, and methods available to them to determine the value of a company. Those approaches all come together and ultimately come into a big puzzle that the valuator must analyze, look at the different aspects of the valuation, and piece together a value for the company specific to its value based on its operations, its cash flow, assets, and liabilities. All these things come together ultimately to form the conclusion of value. And when that all comes together, it's essentially like a big puzzle of a valuation. If you are interested in a business valuation opportunity, please visit peakbizval.com or call 435-359-2684. We look forward to working with you. Thanks.